I'm often asked if we do have a meltdown like Lehman Brothers, and indications are we're maybe in the early stages of another meltdown like that. A lot of people have been concerned that gold might get sold off like it did back then, and my response has been that the Lehman Brothers was a liquidity crisis. People were selling everything they could get in order to get liquid, and they were throwing out the baby with the bathwater, as the saying goes. But my view is that this time, if we do have a meltdown, it's going to be a rush to safety. Liquidity will be only of secondary importance, and that as a consequence, in a rush for safety, the gold price will not get sold off. It'll actually go up. Is that something that you think is plausible?
I totally agree with that, because the idea now, particularly in the view of the U.S. downgrade, the idea of rushing to U.S. Treasury bills as a safe haven in an environment that what you just described, to me is preposterous. You've got to go to the real long-term money. You're not going to replay what happened in the Lehman. It could be ugly, but it won't be ugly for gold and silver. I think they will be the safe havens this time.
Yeah, but it's going to take a while for people's perceptions to change.
Well, that's the best part about it, because despite what we see as just an absolute spectacular investment opportunity, the vast majority of people's the sentiment is terrible in the gold and silver space, and that's remarkable given the fundamentals. So this has got the makings of a huge move, because there's an awful lot of people that have to reposition.
And it's so implausible that people would see a T-bill as a safe haven when aside from the downgrade, you're not getting any interest income, and we all know that there are risks there.
Well, I guess once you're sort of in this camp, some of the behavior in markets appears preposterous. Like why anyone would buy a 10-year U.S. bond with a 260 yield on it in the environment we're sitting in here discussing today is beyond my comprehension.
Yeah, I
which
agree.
Makes me wonder if anybody other than the government is buying these things.
Yeah, that's a good point. I really like a quote by Neil Ferguson, a Scottish historian, talking about government bonds and the perception that they're a safe haven. He was saying that they're a safe haven like Pearl Harbor was a safe haven in 1941.
Well, it wasn't that long ago that they were being called, back in the late 70s, certificates of confiscation, and that seems to have been forgotten. I think they are certificates of monetary confiscation. They will take your purchasing power away as sure as we're sitting here.
Yeah, that was one of the observations of the famous Franz Pick.
Yep.
And I agree with that wholeheartedly. Let's turn to silver. Silver has different dynamics. Some people still see it as an industrial metal and only secondarily as a monetary metal, but I think that's changed in the past couple of years. But more importantly, the above ground stock of silver is relatively small. Yet silver sold off the last couple of days, even though gold held that 1660 area. What are your thoughts on silver?
I think because it's a much smaller market, that the paper manipulators can have a bigger impact in a short period of time. And as a result, and because of a certain large banking entity that has a massive short position, they have a real good incentive to sell it off at whenever they get the opportunity. So I think that's all you're seeing there. I think silver is on the verge of an upside explosion, because the physical market, it looks particularly robust. And I think one of the key factors is it is poor man's gold. And as the gold price continues to rise, it becomes less affordable for more and more people who are going to ultimately want safety in precious metals. They will be forced to go into the silver market, which is a small market. So investment demand will have an outsized impact on the price. And as you correctly point out, inventories in the world are very low because so much of it is consumed, because it is an industrial metal and it has wonderful medical uses and everything. If you examine sort of the new usages for silver, even the demand side from that part of the equation is robust. So you put that together with investment demand, and it's 75% anyways, a byproduct of base metals. And in the kind of world I see unfolding, a lot of base metal demand may evaporate as the economy kind of nosedives. And so even the supply side could be constrained at a time that people want more and more. But I think that silver's headed for those lows in terms of the gold-silver ratio. The gold-silver ratio, is headed for the lows that we've seen historically 10, 15 times. So let's just say, for instance, if gold goes to 3,000, silver could go to $250, $300.
Yeah.
So that's one heck of an investment opportunity.
Yeah, yeah, I agree. And also you have the benefit of owning a tangible asset which doesn't have any counterparty risk.
Well, that's the beauty of all these precious metals, and that's another thing that is not well understood. People, you know, you say counterparty to some people and they look at you blankly, but I mean, it's absolutely essential that you not have counterparty risk, because there's so many weak entities in the world today that your counterparty might be one of them.
Yeah, absolutely. You know, during a financial bust, promises are broken, and you don't get to the end of that financial bust until, you know, the promises that cannot be fulfilled, all of those promises end up being broken. I think we have a lot more promises to be broken, so you really want to own something that isn't reliant on someone else's promise.
Well, I tell you, that certainly gets brought home to me whenever I listen to Jim Sinclair, who I think really has a deep understanding of the malign impact of the derivatives in our system, and the fact that he believes they've changed the definition of how they say how many there are, but under the old definition, there's more than $2 quadrillion worth of them. I mean, those numbers, I mean, I have a trouble with trillions, let alone 1,000 trillions.
Yeah.
So the system's polluted with this stuff, and so I think you have to be in real assets that can protect yourself from what is going to ultimately happen in the financial side of the equation.
Yeah. Just turning to the currencies for a minute, you know, is there any currency out there that you like? Not
really. I mean, obviously the favorites these days is the Swiss franc, the Canadian dollar, and the Aussie. You know, I can speak reasonably intelligently about the Canadian dollar because I live there. Mm-hmm. And you tend to see the warts in something that you're closer to, I will admit. But I mean, Canada is not without its problems, particularly in the eastern part of the country where I live. Mm-hmm. We do have a wonderful resource base, and we do have a small population. Our debt situation isn't as good as people think it is, because a lot of it's been pushed down to the provincial level. Do not look closely at the province of Ontario's financials, or you will be very uncomfortable.
Yeah, it's the weakest link in the chain there.
Yeah, and Quebec's no better. So I mean, so these big eastern provinces, which are where most of the people live, have some pretty tough economic and financial statistics if you look closely.
Yeah.
But having said all of that, it's still better than the U.S. dollar, but at the same time, because we trade, about 80% of our trade goes north-south, and we've risen from 62 cents to $1.03, I think, or $1.02 yesterday. I mean, we just don't have that kind of flexibility in our cost base to sort of absorb that. So naturally, outside of our resource-based industries, most of our manufacturing and that's been really hollowed out.
Is it a depression in places like Windsor?
Yeah, it's terrible in certain places. And I think if it weren't for all the government spending and there's still people are lending the money in Ontario, I think the Ontario economy could look really questionable.
Yeah, but that spending is coming from debt. It's, you know,
it's totally
not savings.
No.
Or, yeah. And
that was why I said just before I was at Alistair MacLeod's discussion at the conference when he was talking about the real theoretical basis for, you know, why we're going through what we're going. Because he's a true Austrian economist, which I totally support. And when you sort of lay it out as clearly as he did, there's no outcome that's very positive here. We're going to just have to go through it and clean it out and start over again.